All right, another quick trade review. This is a trade made on November 10th, 2021 on Lucid Motors. The market overall has been pretty extended. The indexes are all kind of pulling back at this point in time. Like even today, this is the day after the trade was completed. Um, yeah, so we're seeing some consolidation, some pullbacks, although the EV sector has still been really strong. That being said, initially here, I think I'm going to say that I would rate my execution on this trade maybe somewhere around 4 or 5 approximately. Um, the reason I say that is so it was profitable. On one of the last videos, I kind of skimmed over this, but if you see up over here, it says PL day 495. So the difference between PL day and PL open is PL day, as the name suggests, is only what has been made or lost since that trading day has started. So, for example, on one of the last videos, my PL day was red like 1,000. Overall, the trade ended the day before up like 1,700. And then when the next day started, it pulled back to the point where it was only up 700. Hence, the PL day was red 1,000 because it was $1,000 lower than what it was the day before. So overall, this trade netted me just shy of $600. Not too bad, given that once again in this swing trading account here, there's only I started with only 5K deposited in this account like 2 weeks ago, and we're already just shy of 8K. So, not too bad. I've definitely made some errors, and once again, right here, I mean, this being only like maybe a 4 or 5 out of 10 on execution could have been significantly better, as we'll see here in a moment. So here was my entry. The mistakes I made as far as like the entry goes is one, I was viewing the 5 minute chart when I entered this, and didn't really have a proper picture of the momentum in the like the volume that was flowing into it. So we'll go over to the 5 minute chart. At the time, it kind of looked to me like it was going to bounce off this level here, which was drawn based on the hourly chart, which would be this one. It was like an old previous high. You saw it hit there here. It got a little lower than there, and then it hit there here, hit there here a few times, and then bounced around that area a couple other times a little bit later. And then of course hit there just below there and bounced again. So that it's not a super strong area, but there was a little bit of significance as far as like volume traded in that area, which is something to take account of. Now I entered this based on the hourly chart instead of the daily chart, simply because this stock went public through a SPAC only what not that long ago. It looks like January 11th of this year it went public. So there's not really enough historical data to like really draw some levels with serious conviction. So yeah, I went off the hourly chart because it just seemed a little more reasonable, given that this doesn't have as much of a history as a lot of other names. So back to the 5 minute chart. That shows here was my entry right down here, which once again, my mistake on entry was, as I stated the last time, ideally I want to see it kind of playing out, kind of show some consolidation. So in hindsight, I should have bought one of these candles, either this one, or this one. Now, my reasoning behind that, now, some people may say, well, oh, wouldn't you want to technically have bought this one because that's the lowest one? But once again, no, because this level here was significant. So what I should have done is wait to see if it respected this level and bounced there a little bit before taking my entry. So my entry was just a bit too hasty. And I should have waited to see that consolidation really kind of prove itself that it was going to bounce at that level. And I think once again I should have been looking at the 1 minute chart to really see kind of the volume and velocity with a different perspective. For entries, I really like to use that. The 5 minutes all right, but the 1 minute would have been better. And that's obviously the point of this, is to optimize my trades. Yeah, so in hindsight, when I was saying off the 5 minute chart I should have entered, it was like somewhere in this region. Yeah, I would have entered on one of these candles, which would have done a couple things. One, it would have brought my cost basis down literally 50 cents, because my cost basis was exactly 40.50. So it would have brought my cost basis to 40 even, or even a touch below 40, which if you don't really trade, if you're not much of a trader, 50 cents, does it seem like it's that much? Yeah, it's a lot. Even with only 250 shares, 50 cents is, 50 cents on 250 shares is 125 bucks, you know? So that would have, been, what's that? Like 30% ish more profit in this trade had I entered better. So now let's talk about the exit. Of course, so I work second shift, so I was just leaving this on. I had no intention of taking it off before the close for any reason. I knew the EV sector was strong. There was a couple people that came out yesterday towards the end of the day that, Bank of America projects upside for EV stocks, and that made me feel pretty confident in holding it. So I didn't really have any sort of issue with that. Let's get a different perspective here. And now here's the exit. So when I woke up, this had gapped up a bit more, because when I went to bed, I was only green a total, like my PL open total was up about 400 bucks. And then I woke up this morning and my PL open was about 600 bucks. And admittedly, I should have stayed in the position, as we'll see more of in a moment. And I'm sure you already saw the chart. It goes up quite a bit, which I was pretty confident in. But a couple things physically were affecting me in my exit here. One, I have only been sleeping about 4 or 5 hours a night because I've been back into trading consistently. And since I work second shift, I don't get home from work. I work part-time second shift, I should say, because normally second shift, I believe, is 3 p.m. to 11 p.m. It's like something like that. So I don't get home till about 9:30 or 10 most nights, and then I will kind of eat and take my NyQuil and my neuro sleep and head to bed. But I usually get up at between 4 and 4:30 to go to the gym, because if I don't do cardio in the morning, my mental acuity suffers and it affects me in my trades. Now, that being said, this is Thursday morning when I exited this right here. And Thursday, being late in the week, having several days in a row of only having a handful of hours of sleep, I was groggy and not fully there, so much that I actually turned off my initial alarm, regrettably. Didn't go to the gym this morning. And then I had another alarm set for 5:50, because the earliest I can execute trades is 6 a.m. So when my 5:50 alarm went off, I got up, came to my PC, loaded up Thinkorswim, and looked everything over. And I was watching this, and I looked over. So on my other monitor here, I'll try to show. I have 2 more monitors over here. This one shows all my indexes, and this one shows peers. So I have like other EV. I have an EV ETF here. Which I switch this between a couple ETFs periodically just to see how they're both doing. And then I have, of course, right now, Lucid's actually on here too. Before, I had one that just IPO'd yesterday called Rivian. And then I have Neo and Tesla up here. And Tesla was kind of pulling... Ooh, the green screen effect's kind of playing on my hand there. That's odd. But Tesla was kind of pulling back and consolidated. And given that, like I said, I was also not properly rested and wasn't, fully in my focused proper state of mind. So literally, you can see where I exited. Like I said, the earliest I can execute trades is 6 a.m. And look, how do I do this? Oh, I cut myself off. Right down here, if you follow my cursor straight down, you can see like a gray line. 6:01 is when I exited at the top of this candle. It turned green for a minute on this candle. And I said, you know what? I think this will respect this level, and I think this will push higher because the EV sector is strong. But I am not in the state of mind, and I'm really tired, and I don't feel like I can properly manage this trade. So I'm going to walk away with the profit that I have and call it good. I think something that also played effect on that decision was one of the last trades I did, if you'll recall, when I reviewed this trade that I executed on Blink. I didn't do that on Blink, and this is the one where my PL day showed it was red 1,000, so I walked away with only about 700. If I would have flattened that trade at 6 a.m., which I thought about doing, I would have walked away with about 1,500. But instead, I decided to stay in the trade, and I discussed it last time, so I won't go into it much here for the reasons. But I decided to stay in that trade, and I walked away with $1,000, almost $1,000 less than what I could have had. And thinking about that, having that in the back of my mind, I said, you know what? Just take your profit on this one. Take your profit. Wow. Plug is looking really strong. If this, I can't chase it here, but man, if Plug pulls back to somewhere between like under 39 to like above 37 range, kind of consolidates, or hell, honestly, even like 38 to 39 and a half, this thing's looking crazy strong. I wish I was in it, but I don't chase, so if I'm not in it, I'm not in it. So back to this one. And once we can see here, back on the 5-minute chart, if I would have left this trade on and went back to sleep, as I did, I exited the trade, and then I went back to sleep for like 3 hours, so that I actually had like 8 hours of sleep instead of 5. If I would have, I could have, by the time I woke up and got to my computer, it would have been in this range, and I could have taken it off for, double the amount of profit I walked away with. And then if I would have left it on, once again, I could have taken it off up here for almost 3 times what I walked away with. So there was a lot of room for improvement in this trade. It was green. So once again, as I said last time, I made money clicking buttons, so I should be happy, but I'm not really, but I think that's a crucial factor to enjoying trading, is that you're never really satisfied unless I catch something within, a few cents of the bottom, and I let it go within a few cents of the top. I wouldn't be satisfied, So that's just part of the fun, the continual improvement. It's also why my favorite video game is StarCraft, right? Because it's just incredibly challenging, and there's always more you could be doing. There's always more variables to be considering and thinking about, and yeah, it's room for improvement. So yeah, that was this trade, and the only other trade I made between yesterday and today, I'm flat right now. I don't plan on entering anything today. I kind of want to see where the indexes consolidate and how the different sectors hold up. A lot of things, ton of green on the board today, which means, ideally I would have been in something, but I'm not. And it's not worth chasing because it throws off your risk parameters. So we'll see where everything else consolidates. But yeah, my only other trade I made yesterday, I hate trading IPOs, and I told myself like 10 times, don't trade this. Don't trade an IPO on day 1. Trade it on day 2. Day 2 and 3, there's some levels you can risk off of by then. But day 1, you can't. And I ended up trying to hop into this Rivian IPO. I hopped in like here, on one of these candles for a really small size, 50 shares, because I know IPOs can buck like crazy. So I didn't want to have size in it. And then once this candle broke, the second that this candle didn't go green, I stopped out for about $160 loss, $170 loss. Yeah, so, and as you can see, if I would have had the confidence to hold, which I never would because I don't bag hold, just period. If I would have been well rested and watching this morning, then, you know, you could have jumped in with 50 to 100 shares again here, kind of out of the gate, or in this area of consolidation through here, and made a decent profit. For example, you hop in here. Let's say you get in just so I can do, you know, even points. I don't have to calculate change. You jump in 50 cents here. Even if you got out right here, just a few minutes later, you know, what is this? Is this a 5 minute? Yeah, that's like half hour later. You'd be up 50, 100, 150, 200, 250, 300, 350, 400, almost $500 if you got out in this zone here, you know, and another almost 500 if you got out up here. So that being said, I kind of set a hard rule for myself, which was already a soft rule, which is I don't trade IPOs day one. Some people love them. I can't trade them. I don't have the mentality for it. Yeah, it's just not for me. Plain and simple, not for me. Not one of my setups. So that is that. I'll see kind of where everything is at tomorrow. Maybe I will enter something if the levels make sense. A lot of stuff I've been looking at, once again, is up right now. So I'm not going to chase. I'm not going to get into anything. I'm going to wait for some consolidation. Hopefully a few things will show some nice kind of flags on the daily charts, and we will go from there.